What's up guys? Some of my favorite stocks have reported earnings over the last few weeks, and now I'm just going to go all in on what has happened during their earnings, where I think they're going, what revenue, what numbers they came in with, did they beat on numbers, and they include Corsair Gaming, Dropbox, Revolve, and of course Tattooed Chef. All of these stocks have had a bit of an odd kind of way about it for this earnings. They don't really know where they've gone, but we're going to get straight into them and go through their earnings in a small bit of detail for each one of them. And to remember, this is not financial advice, and to remember to do all your own research into these companies if you are interested in buying them. Also, we're present on all the below socials that are linked in the description. Remember to check out on all of them, and you can see what we do on a day-to-day basis and how we're keeping people up to date through TikTok, Instagram, Facebook, and the likes. Look guys, we'll see you in the rest of the video. First up here, we have a stock called Dropbox. I'm sure a lot of you guys all know what Dropbox is. A lot of you probably even use Dropbox, but don't realize what this stock actually is, to the extent of how profitable it is, how much revenue it has, but you still use the free 2 gigabytes that it gives you to kind of entice you in to the Dropbox world. But Dropbox is actually a subtle beast with over 660 million users on its free version and over 16 million paid users. It's an absolutely crazy stock, really. It's a crazy company. They have so many people that are involved in this company and are bringing it on to further and further levels. And remember, it hasn't been public for that long either. So Dropbox reported in the last few weeks, and they had a very, very impressive number. And Dropbox is a stock that isn't really affected too much by market moves in the S&P, in the Nasdaq. It kind of just does its own thing. So look, we're going to go straight into Dropbox numbers. This is just the current state of Dropbox as it is at the moment. It's been coming in between the 30 to 32 range over the last few weeks. Dropbox had a great Q2 of 2021. They had revenue of 530 million, up 13.5% year over year. And I think that this revenue growth is going to be consistent for the next few years. So don't be surprised if they come in with 11, don't be surprised if they come in with 14%, but I think it's going to be very consistent for the next few years. So Dropbox had a net income of 84.4 million and 169.4 million. So up 558% and 76% year over year, which is absolutely crazy. The net cash provided from operating activities came in between 219 million and free cash flow of 216 million for the quarter. So Dropbox is aiming to get to a free cash flow of 1 billion. When it gets to that, it's absolutely crazy, as it comes in with a market cap at the moment around 12 to 13 billion, and it has a free cash flow of close to 1 billion, which it will achieve in the next year or two. So Dropbox is ever expanding from its cloud storage business, with HelloSign being one of the main drivers of e-documents and signatures. They're one of the main competitors. Adobe Sign and DocuSign, they're the main competitors to that, and I think this is going to be an absolute revenue growth beast for them in the future. They also got a company recently to help them secure their network in document encryption, and they're really going in all the right directions. And Drew Houston is also a member on the Facebook board. He has good ties with Mark Zuckerberg on Facebook, so they could potentially be a buyout candidate as well, but hopefully they actually do not and stay in their own right. But they are absolutely doing so well. They are run so well by Drew Houston. It's absolutely crazy. Their financial statements and onlookings were absolutely very good. But one of the main things I kind of look at is the user growth. So the user growth from 14.96 to 16.14 million. That's over 1 million users added to Dropbox monthly billing. This was everything they do is by monthly billing, and the average revenue by paying user was 133 compared to 126 last year. So that's always increasing. So Dropbox, yeah, I think they're going to have a very, very solid rest of the year. Depending on obviously market risks, they could go up or down, but generally I think they'll be pretty steady, as they always are, and they're just slowly adding up and adding on to where they're going at the moment. So yeah, I'm very, very happy with Dropbox and the way that it's going, and it'll be a growth beast for many years to come. So right, let's move on to our second stock of the bunch. The second stop up here is Tattooed Chef. You've heard us talk about Tattooed Chef all of the time. It's one of the biggest holdings that myself and Gino have. Tattooed Chef is an absolute growth beast in the food industry. So food stocks are generally seen as quite boring, like PepsiCo, Coca-Cola, even like the likes of Walmart, but then you have like General Mills, them kind of stocks. They're very, very boring and low growth. But then we have Tattooed Chef and the likes of Beyond Meat, Impossible Foods, which is yet to come public, but their growth rates are off the chart. And I think that Tattooed Chef is in a much better position than where Beyond Meat is, and Beyond Meat is trading at such a premium compared to Tattooed Chef for similar amount of growth rates. Their revenues aren't miles apart either. So yeah, look, it's a pretty bit no-brainer between the two, and I think it's a lot less risky because the price on Beyond Meat is so elevated. But anyway, the second quarter of Tattooed Chef had a 45% increase compared to the year prior, which is a crazy increase. It's a little less than where it was in the first quarter, which is not what you like to see. It's not great to see that going down quarter over quarter. The gross profit was 8 million compared to 3.7 million. So it's actually a gross margin of around 10% gross margin, which is very, very, very good. And I'm very, very happy about that gross margin. But the thing is that had a bit of concern was the net loss of 53.2 million, which was a one-time fee of 50 million for securities issues, which will come to light over time on what that actually was. So as we go more into their results, they have a great cash position. They had cash and cash equivalents of 140 million, which is absolutely crazy, and it's great to see. The outlook for the year, they're coming in between 235 to 242 million, which is an increase between 58 to 63 million. So it's absolutely 63%, sorry. It's absolutely great guidance, great growth. The management team is fantastic with Sam Galletti, and they know what they're doing. People were very, very put off by the net loss that came in with Tattooed Chef, and I can understand why, because it isn't too clear what it actually was. People were disappointed that it went down quarter over quarter, but sometimes these things do happen. We also have a lot of things going on in the world at the moment that have to be taken into consideration. People don't understand they might not be buying as much stuff in the shops because they can go to restaurants, so that also has to be taken into consideration. But as long as they stay on target to meet the guidance that they've already set out at the beginning of the year, I think this will be an extremely successful year for Tattooed Chef, and expect them to beat these growth rates in the year to come. So 2022, I think it's going to be a huge year for Tattooed Chef. So get your positions put in this year. The third company up here is Revolve. So Revolve are the online retailer for the clothing sector, and they are growing absolutely fantastically. So year over year data is absolutely crazy, but what is actually more interesting is 2019 data when it comes to Revolve. So when everything was open in 2019, people were going everywhere, people were seeing bands, all that kind of stuff, going to festivals, going out for dinner, everything like that. So it's more interesting to look at the 2019 data compared to 2021 data, and now we can actually see how much that they are growing by, and it's absolutely crazy. So if you go into their growth rates for the year over year, it's around 60% for year over year and 41% from 2019. That is an extraordinary number for this company. They are absolutely smashing it at the moment, and I'm delighted to be a shareholder of Revolve. It's a company that's wasn't even thought about to be one of my biggest positions, but actually grew into my biggest position temporarily in the recent market, where it went up to over $70 per share. It's only to come down in the last few days. And yeah, look, I can't really stress how impressed I am with this company, how their numbers are doing, how they're doing on their cash flow, their balance sheet. Absolutely fantastic. So if you just go into it, it's 228 million in revenue in the last quarter compared to 142 in 2020. Like, that's absolutely great. And then they realize how important 2019 was, and they show you 161.8 million in 2019. So it's absolutely crazy. Like, it's great to see that the company is performing so well, and it's beating all of my expectations so far. The total net sales, I said, was 228 million, and their gross margin was 55.6%, which is a year-over-year increase of 517 basis points. So net income was a record quarter again for Revolve at 31.5 million, and a year-over-year increase of 122 million. So they're getting even more profitable as well, which is what you always like to see. And their earnings per share was 0.42 cent compared to 20 cent in 2020, and it's 110% increase. So they have smashed it on revenue, net income, gross margin, and earnings per share. This has been a fantastic quarter, and I expect it's only going to get better as things reopen. I know there's fears about things might close again, especially in the US, but I think if everyone is vaccinated and ready to go back to doing things, we won't end up in the same situation as we did in 2020. So guys, they also ended up with a balance sheet which is extremely good as well, and they ended up with cash and cash equivalents for 219 million, an increase of 92 million from 2020. So yeah, they're increasing things all over the place, and I really think this is going to continue for the next few years. I don't see the growth rate going down dramatically unless we are all locked up again and we can't do anything. But other than that situation, there is no way that this stock is going to lose its revenue growth. But yeah, the stock price at the moment is looking pretty attractive if you don't have a position, potentially even adding some because it's down on a dip, or you might just leave it alone if you did get in as cheaply as I did. So I personally started my position at around $14 a share. It is now trading between 50 to 65, just depending on what day you look at it these days. So it's been an absolute game-changing stock for us. So we're going to go now into the final stock of the day, and that is Corsair Gaming. So Corsair Gaming is a company that is extremely beaten down. It's possibly one of the cheapest stocks in the stock market at the moment, and I was kind of hesitant at this one for a while, and then I started reading their reports, listening to their conference calls, and it's just gotten more and more attractive as time has gone on. So I've eventually pulled the bullet on it, and now it's in an extremely attractive pricing range. So you can pick up these shares now for around $26 range, which is absolutely crazy. I thought I was getting in initially at 33 as a very, very good starting point, but now they've retreated. It's even better. And the numbers that they have been producing are absolutely crazy, and they support that this growth is not going to slow down. You have to think about gaming. How much has gaming improved in the last few years? Where has it come from where it was 10 years ago to where it is now? Now we have people paid to do gaming, whereas if that was your career choice 10 years ago, people would have really not understood where you were going at all. So this is all going to get bigger and bigger and bigger. We have the semiconductor chip shortage squeezing supply chains, that making the price of these things and the demand go up and up and up. And Corsair are there to take advantage of all of this stuff. They're absolutely in a great position to take advantage of the gaming society that's going to be ever growing, and also with the demand that's coming in from the semiconductor shortage that has just come in over the last year or so. So we'll just go straight into their numbers. So their net revenue was $408 72 million, an increase of 24.3% year over year, which is absolutely crazy. People thought that this was going to go down and down and down, and they wouldn't get anywhere close to their numbers last year. So Q2, Q3 and Q4, I think that Q3 might possibly be up on Q2, but I don't think it will be astronomical. I don't think it'll be amazing. But Q4 in the run up to Christmas, that's when I think this stock is going to get an awful lot of people buying Corsair kit, Corsair gaming equipment, upgrading their setups in the run up to Christmas, similar to kind of with like Amazon, all that kind of stuff. When it comes up to Christmas, them stocks get an awful lot more business coming into them as people are buying gifts and upgrading their equipment and just spoiling people in general. So I think Q4 is going to be very, very good for Corsair Gaming. Q3, I wouldn't expect anything amazing, but just solid growth. And yeah, look, 24%, if they continue that for the year, I'd be extremely happy with this. Considering that the way this company is priced, their revenue is going to go over 2 billion and the current market cap is 2.5 billion. So the price of sales is just over 1, where you'd be paying an awful lot more for stocks with similar growth in the tech space, and like you'll be paying 5, 10, 15, 20, 25 multiple of sales, where you really are not paying that with Corsair. It's one of the cheapest stocks out there at the moment. So their gross profit came in at 130 million as well, with a gross margin of 27.6, which is absolutely great. The gamer and creative peripheral segment gross profit was 54.6 million, an increase of 41%, and the gaming component segment was 75 million, an increase of 14.2% year over year. So the profit is actually more so in the gamer, creator and peripherals segment compared to their standards, where they're making gaming cases for PCs and just equipment, webcams, all that kind of stuff. So it's going to get more and more towards the streaming side of things. It's always going to get bigger and bigger and bigger. So yeah, their net income was 35 million, or 36 cents per diluted share, and adjusted net income of 32 million and diluted per share at 37 cents. So it's a profitable company, and their PE ratio is trading it's in between the 15 to 20 range, and the forward PE is like even less than the current PE of the company. So it's one of the cheapest stocks that you can possibly nearly get at the moment, and that's why I hold it in my portfolio. I see it as a very, very low risk, and it's good to have an exposure to the gaming side of things. I do expect that this stock will start moving towards the end of the year. Obviously, there's market risks that are in there that might just crash the whole market, but if it's performing as the way it is, the way that I see it's going to perform, I think it's going to start moving up along with Tattooed Chef towards the end of the year. We're going to have steady growth from Dropbox and also Revolve. Look, it's up and down like a yo-yo for me at the moment, but I think it's also going to keep going forward as them revenue growth is absolutely insane. So they had a lot of things that they actually have concern about at Corsair, and that is actually the shipping, the congestion. They said they couldn't get enough products out there because stuff was stuck in shipping containers all around the world, and this is just an issue that is affecting every business at the moment. And so the shipping is just so expensive. It's over 400% more expensive than it was 2 years ago. So yeah, that's just a bit of concern for them, but all these things are short-term factors. The financial outlook for the year, and I think they are going to meet this, is net revenue between 1.9 to 2.1 billion. I think they're going to get over the 2 billion mark, and I'll be very, very impressed if they do. And adjusted net income between 235 to 255 million, which would be absolutely great as well, especially because the cap is only around 2.5 billion at the moment. The PE is so low on this company. So look guys, it's a bit of a long video, so I know it's going to be difficult to get to the end of it, but look, I hope you enjoyed this video, and look, I'll bring myself back to the full screen, and I hope you enjoyed this video anyway, and it gives us a bit more information on some of the stocks that we own, that we follow, how they did in their earnings, where I think they're going. Am I comfortable? Am I buying them or am I selling them? It's up to you to kind of interpret in your own way what you think of what I just said. So remember guys, it's not financial advice, and do all your own research when you're looking into any sort of stocks that we do mention on this channel. And remember to hit the like button, hit the subscribe button. It really does help out an awful lot. And look guys, we will see you in the next one, and it'll be me and Gino taking it home again on Sunday. So thanks guys, and I'll see you on Sunday. Bye bye.